Elizabeth, welcome to the show.
Thanks, Justin.
I am excited to talk with you. There's so much to go through with Hustle Fund and your story. I think one of the things I want to talk about first is just thinking about your background in starting companies, being at 500 startups, all these different things. Going from selling a company, your own company, to the venture side, why? Take me through that decision in the first place for you.
Oh, that's a great question. Well, I mean, I don't see myself as a VC actually. That may just shock people, but I actually have never thought about VC. People are like, "Why did you go into VC?" And I say that I've never thought about it. And I think here's my perspective. After my prior company LaunchBit was an ad company. And after I sold that, I was like, well, it was a relatively modest exit. I wanted a bigger, I wanted to take another swing at this and do something big, but I wanted it to be something that could be my life's work for 30 to 40 years. And when you think about what are the things you want to work on for 30 to 40 years, that's actually a really hard problem. Like you think about this, you think about that, and you're like, no, I'm really only interested in that for 2 days. So like and then it dawned on me at that time, I was also mentoring a lot of startups and investing in startups, either in a small angel capacity or through 500 Startups, which is the accelerator program that I went through with my company previously. I realized that actually the problem was right in front of me all along. That really the problem that I wanted to work on for the next 30 to 40 years was helping startups. And specifically, startups have three main challenges, or most people do: capital, but also knowledge and networks. And so for Hustle Fund, our mission is actually really to just move the needle on all three of those things in startup ecosystems everywhere. So that's our mission. And certainly as part of that, capital allocation or deployment or investing in startups is part of it. But I just don't really see myself as a VC.
Well, that from the outside, with the number of things Hustle Fund does, I understand where you would say that. And to that point, you have Camp Hustle that will be coming up. Since 2022. I'm sure you'll do it again if it goes well. You have Angel Squad, other things you're doing. Just take me through how you look at the different ways you can build community, help founders, help investors outside of a traditional just investing out of a fund, because there's a lot of stuff you're doing at Hustle Fund.
Yeah, so diving into those three things, capital, knowledge, and networks, I think that, all three are important. And when we started this, we thought about, all right, what is the thing that is needed most? And at that time, we noticed that there was a real gap at what I would call pre-seed, basically the stage where there's early stage startups, there's no revenue, and no investor would make a bet on you unless you're well connected. And at that time, I could have counted on one hand, just a handful of funds that were willing to invest at pre-seed and maybe another handful of angels, and that was kind of it. But certainly there are more funds doing that now and more angels doing that now. I still think there's a dearth at pre-seed, but that was where we thought there was the biggest need for ecosystems literally everywhere, including here in Silicon Valley where I am. But I think as we go along, we try to attack problems based on partly where we see opportunity. We also have to find product market fit in any endeavor that we do. We're not trying to push boulders up a mountain and trying to force things on people. Like if there's no need for something, then why do it? So that's kind of how we decide to launch things. So we have Camp Hustle coming up, which is an investor conference, and I think part of that is there are a lot of aspiring angel investors and even emerging fund managers, but it's often difficult to find information on how do you start a syndicate, or how do you start a fund, or do I need a lot of money, or how should I think about my portfolio, or things like that. And so that is like the in real life version of some of the content that we try to teach. And I know that you all at Vitalize also try to really, help angel investors, which I think is amazing. I just think that prior to, a couple of years ago, there just really was a dearth of information for even people who wanted to be on the investor side, right? So we
Yeah.
just try to tackle problems as they come up, and we have general managers on our team who are dedicated to specific things. It's not like I'm running around, doing all this stuff.
I totally understand that. And let's start talk about that one since we're on that right now with Camp Hustle, going the kind of live in person route for something to kind of educate people, which we've had this pandemic and this kind of I think desire people have to get together in person. Just take me behind the scenes even of deciding as a team that we want to run with this direction as let's do this Camp Hustle thing. This is going to be great. I'm just curious as to more about that because there's so many directions you can go as a startup, as a venture firm, whatever. we always are Vitalize are thinking about like new and different ideas too, and we see what's going on in the industry. Take me through like Camp Hustle and that like inception behind that.
I think part of it is also just fun. I mean, you do some things for business decision reasons and
Absolutely.
all that, but it's also important to have fun. And I think just with the pandemic and everything, at least for me, I don't know about for you, but I felt pretty cooped up in these walls.
Yes.
And so I think a lot of us just want to get out there and meet people and that kind of thing. And so Camp Hustle is a way to do that. I think, we do a lot of online content and a lot of online things, and we just felt like, well, this is something kind of different, especially given the last 2.5 years.
Yeah, they're doing a lot. I would say if you see from the outside perspective, we're like, oh wow, hustle fund is just they are definitely hustling. That is for sure. With that too, with the online side of it, then, and you have what you're doing, the Angel Squad, and seeing how that has grown over time as well. Take me through the thinking behind that. I mean, in theory, you could have just continued to kind of run your fund. So you raised fund one before, then fund two. You could have kept going that route. You go the angel route, have people invest alongside you at the pre-seed. Well, how'd that come about? Vision for that. Would love to just hear more about Angel Squad as well.
Yeah, well, a lot of that is due to Brian Nichols, who I 100% credit for that. Like he spun it up, he got it going, and he really grew it out. I mean, now the team has grown, and there are other leaders in there as well, including Haley Bryant and Jamie Melzer. But Brian, is the one who just ran with it, and so I didn't do anything. But I think that for Angel Squad, the way that we kind of saw the problem was, well, I think it is great. There are all these emerging fund managers, but having been one myself, and you have to fundraise, and that's a slog, especially for Fund One, and it takes forever and a day. And here's an interesting stat, Justin. Our Angel Squad in their first year alone deployed more capital than our Fund One,
Oh, that's
which
amazing.
is crazy because it took us a long time to raise our fund one, and then we deployed it, and that was all over the course of whatever 2.5 years. Angel Squad did all of that in a year ish, and so I think that's sort of the power of angel investors, where all right, one approach is you have fund managers and you go and raise, and that's great, but another, I think, approach to that is, can we pull together people who already have money and make decisions about their own money? And maybe even if it's not a lot of money, if you can band enough people together, and I really actually love how Vitalize is also, thinking along the same lines. I think we're very, I don't know what the word is, but like in the same spirit, or whatever people say, whatever the phrase is.
Yeah, in the same
Um,
vein. Yeah.
we're- yeah, like-minded in that regard. Like, if you can band people together with a few $1,000s here and there, that can actually make a huge difference for a startup. Just getting even a 50 to 100K check into a startup from a whole group of people is a pretty amazing thing for a startup that's just getting going. So that was the idea behind Angel Squad. Like, that's just a different approach in getting capital into startups, and arguably in a faster way than spinning up a new fund.
Yeah, that isn't so interesting to see that model, your model with that. We obviously vitalize our model as well with that, and just seeing that there's so much capital out there. People are willing, they're interested in what this asset class is, and to me, it's fascinating just to see the interest people have had, whether it be non-accredited or accredited. People are just like, oh, what are startups? What is this thing? You have the education components, so they start to understand like the mechanics behind the industry and everything, and that opens up way more for people. And I think I remember talking to Jordy Hayes from Party Round, and he was saying like one of his, I think, friends who wanted to put like 1,000 or 500 bucks in his startup, like it wasn't easy to do, couldn't do it necessarily. Then he ends up bringing in like thousands and thousands of dollars. He was either in pipeline or other investments. So the check size to helpness ratio was there, where it's like insane if you allow some smaller checks in, which I think the industry will, open up more in that regard. We've seen crowdfunding, how that's already grown. I think you see like WeFunder with their community round, launching that as well, with how that's opening up more people kind of lobbying to invest in these other companies, which is fascinating. I don't know. What are your thoughts on crowdfunding in general? Like, have you seen that, or how you think about that as a fund too?
Oh, I'm a big fan. I'm a big fan of just in general opening things up. And this may be, I guess slightly controversial to other VCs, but I mean, I think, you know, there's certainly been a lot of talk about, lack of diversity in tech ecosystems. And I think actually a lot of that does stem from funding, in that if you were to truly have an open market where literally anyone in the world could decide where to put their money, I actually don't think you have that problem as much, because everyone will kind of decide where to put their money in a different way, right? You need that. You need truly a free market when it comes to investments, I believe. And but the problem is the way that regulations are, and this is not even just, oh, people are sexist or racist, but rather like the way that our regulations are, per the SEC, like there are all these limitations on how you raise your fund and how many people can be in your fund and like all this stuff, accreditation rules, etc. So I think if you can open up a lot of that, and obviously the pushback is, well, you don't want everyone to lose their money, like, but if you can do that in careful ways and create a free market, then I actually think that's just good for the ecosystem or the general market, because what ends up happening is you truly then have a much freer market for great ideas to kind of bubble up, great ideas and great founders to bubble up and be able to get a shot at executing on a business.
What? Yeah, one of the things I was going to say with that, thinking of obviously that opening up and access, which I think will be great for the industry, and like you said, a lot if it comes with that. Kind of shifting gears a little bit. One of the interviews you were on a while ago, it was around, you mentioned kind of like LPs investing in, the GPs, brand being a part of that as one of the factors as to why they would invest. You mentioned like SaaStr, for instance. SaaS obviously like huge standout with their conference and everything, and like they differentiated in that capacity. Hustle Fund, how do you think about brand building, what you do for that to kind of grow your brand to stand out in this crowded market of sorts that is venture capital?
Yeah. Yeah, I mean, I really admire what Jason Lumpkin has done with SaaStr. Like, they are the go-to for anything SaaS. I think for us at Hustle Fund, like, because we're at pre-seed, we are just fundamentally generalists. Like, we are not specialized in SaaS. We're not specialized in fintech. We're not specialized really in anything. But I think that the way we think about things is like, hey, can we just build a brand around tactical information that will help founders at this stage? Like, when I think back to when I started my company, I literally had no idea what I was doing. Everything from I didn't know how to raise money, I didn't know the lingo, I didn't know what to do, or really anything. So can we provide tactical information around things like fundraising? To a lesser extent, customer acquisition, like how do you do customer development and all that. We try to put out tactical content on basically things that founders at this stage would need. So that's how we think about our branding. Like, having been founders before, can we offer some advice just to the open world, whether they end up, taking money from us or not? And, along the way, that's also helpful for marketing.
Let's double click on your threads that are phenomenal, by the way, on Twitter. Everyone talks about them. I think you're very much so known for that. How did that get started? And take me through the progression, because my marketing mind is just like, oh my gosh, it's genius. Of course, these are working so well. You have the experience already from starting your company. Like this makes so much sense. But from your perspective, take me through more of that, and like when you write them, I'd love to more details about
Thank you. I wish I could say it was deliberate and like a concerted strategy, but unfortunately it wasn't. So what happened was, many years ago, after I exited my company, I was thinking, gosh, how clueless was I? Like, there were so many things I learned along the way. And so I started writing just for my own self, not really for anybody, a series of blog posts on my blog. Like, I just would put out one a week, actually. And it was on something that I had learned along the way,
that.
and I had so many learnings. There was always content to write, and a lot of it was based on like things that I was clueless about for fundraising. Like, an example was when people told me, "Oh, you should pitch your company." I thought that meant, "Oh, you walk into somebody's office and then you stand up at the front and you do a presentation like you're one of those pitch competitions." But
Mhm.
anyway, so I started writing all these posts, but they were very time consuming. I'm not a good writer. It takes me hours to write a post. And so that turned into threads, because I felt like, well, I still want to keep up with my blog, but I really don't have time for this. I'll just write the bulleted version in tweets. And that actually ended up, I guess people don't have don't care about reading my blog posts, and so they would much prefer to just skim in 20 seconds like a tweet thread, and decide whether or not it was for them or not. And that ended up taking off just as an alternative to writing my blog. So unfortunately, I've kind of, I don't know, not written as much as I would like on my blog.
When do you end up writing that? I mean, as any venture capitalist knows, like the amount of inbound you get, meetings you have, whatever, there's a lot. When do you personally find the time and make the time, I would say, I guess, to write then?
Yeah, so I don't really plan it out. Like I don't have a marketing calendar
Yeah.
of this is what I'm going to tweet on this day or that day. I mean we do to some extent for things we want to launch or announce, but for just the regular threads on I don't know, how to put together a 5-slide pitch deck or whatever. It's more about like I had, let's say, 2 conversations with it could be my own portfolio founders or other founders about some topic, and then I'll think, actually I didn't know anything about that either. Maybe I should tweet about it. So it usually stems from some conversation I had like some recent day, and then I just like hammer it out in, 10 or 20 minutes.
Yeah, you have a gap in time. Here we go. This is on your mind. Boom. Yeah, I agree. I think talking to Gail at Vitalize is a similar thing when she has stuff. It's like, yeah, you just have a meeting with the founder. You're like, oh, wait, I should write about that thing that whatever was useful. And that's kind of how it goes. One of the things I'm curious about too, with what you mentioned being kind of a generalist at pre-seed, and these are so early companies, obviously, is it you're investing a lot of times just to have an idea? Do you have any requirements around what you want to see? I would love to hear more about that for the founders listening, or what you're kind of looking for. And obviously, there's many different things I imagine, but anything around that in your investments would be helpful.
Yeah, it's a good question, and this is purely my own opinion. Even people on the Hustle Fund team may disagree, but so for pre-seed, we define that as pre-revenue. So we're comfortable investing pre-revenue. That being said, I would not say that we invest at the idea stage. Like if you just thought up an idea yesterday, we would want you to have done something before we invest.
Yeah,
But that done something doesn't necessarily have to be a whole lot. I think it's just to kind of show that you can get started on execution, and also for us to be able to understand the direction of the execution. So an example in my mind of what that great execution looks like in the beginning is, you let's say you quit your job yesterday, and then today you call up, let's say, 5 prospects, like 5 customer prospects, and you try to do customer development with them and get some good learnings this week. And it's like the speed of your learnings, even if you're not actually selling something, is really important. Or maybe you try to get a wait list together of 100 people this week or whatever, and you're in coffee shops and signing people up or whatever. That's the kind of stuff that we love. So I think when I say we like people to have done something, it's maybe it's an early version of the MVP, or maybe you haven't built literally anything at all and you're just getting people on a wait list or having conversations. Doesn't matter, but that's kind of where our sweet spot is. And then in terms of how we decide to take the next step beyond the application phase in talking with founders whom we may want to invest in, a lot of it honestly is based on the idea and how the founder has thought through go to market. Now, obviously, a lot will change with both the idea and the go to market, but
yeah,
I think we tend to shy away from crowded spaces because we're a small fund, and crowded spaces tend to have really high customer acquisition costs. Just because there's everybody and their mothers in there trying to get the same customers,
yep.
so that drives up the expense. And so we do try to shy away from that. And that, unfortunately, I think we will end up missing out on a lot of amazing founders who are working things that just are not a good fit for Hustle Fund. And that's fine. There are other funds out there, but that's just kind of how we think about things. So we naturally then end up investing in a lot of ideas in things where you would almost argue the opposite, which is like, is there even a market here? Why is like there's literally nobody else here? What is wrong with you? That kind of
Yeah.
thing. And so that might be things in emerging markets or weird out there ideas, cryptocurrency, and new things, stuff like that.
To that point, so I mean, diving a little bit deeper on that side of things, things that are not necessarily crowded markets. What are you evaluating with those in terms of the potential for those markets to grow, in terms of what those can become? Are they going to be a market leader in that market then? Like, how are you thinking through some of those things when you do look for not crowded markets? Like, how do you think more in depth about that then?
I think the honest answer is you can't
Yeah,
in markets like that, because I think almost by definition they're not established.
yeah,
I mean, even take something like cryptocurrency, which is pretty hot. Like, who knows where it's going to be in 10 years? Like, I don't know.
yeah,
So I think we're making a bet that like, okay, it if everything goes well about the thesis of the market, then that's fine. But I think we're looking at things on a more granular level of, all right, if we assume this thesis to be true, do we believe that based on the limited data points that we have, like, can this founder execute on that? And what is sort of the right way of thinking and prioritizing to get there? And a lot of it is we very much favor founders who are very customer acquisition oriented. And that does show up in your actions of, like, how you're doing your customer development, or some people even are very impressive and they get pre-sales ahead of having a product. Like, that's very impressive to me. So things like that
Yeah.
are the signals that we're looking for in founders.
Taking a bit of a step back. So I know on another podcast you had mentioned around raising fund two and lessons from fund one to then raise fund two. And one of the things I think was from Charles Hudson, you had mentioned around like, don't run out of leads. That stuck with you throughout the process. Take me through that fundraising process on the VC side of things, raising your second fund after you had raised the $11.5 million first fund. I think you wrote about that in a Medium article, a blog post there. Take me through raising that second fund, some lessons from that you took with you into that. And then at some point, I imagine there'll be a fund three, but just take me through some of that lessons you kind of learned from fund two.
Ooh, just keep going. I think that's the extended advice to what Charles mentioned to me, which is like, don't run out of leads. And I think, I didn't think too deeply when he mentioned that, but I think later, if you were to, let's say, expound on that, it's, you want to constantly be meeting new potential investors, because you don't want to be in a situation where you're trying to convince people who are clearly not sold, right? So that means that you have to always be meeting tons and tons of people in some form or fashion. So how this then manifests itself between fund one and fund two is, all right, we close fund two, but even though we are not spinning up a new fund, we have to start that process like ASAP. So as soon as we closed fund one, we took a couple months for the summer off, but we immediately started building relationships for fund two again, because we realized, that was the only way to get enough leads to be able to then go after fund two. I mean, when you think about it, it's like, all right, your warmest leads are more or less exhausted in fund one. I mean, I consider myself pretty privileged and have like a friend group that has a certain level of wealth, but they're not like super wealthy. So we knew they wouldn't be coming back for fund two. In
Yeah.
addition, we really did want to raise a larger fund too, and kind of per some of the SEC regulations around how many investors you can have. It also meant that our minimum check size needed to be higher, and that was just something we didn't see our friends being able to do. So we had to go out to a whole new set of people we didn't know for fund two, and that meant we needed to start super early.
With that too, and with going from $11.5 million fund one and then a much larger fund two, the fund size that you want to grow into eventually, or the even construction of that, like how big do you see that at pre-seed? I know this is very early stage. You see these massive funds going 300, $400 million seed stage funds, which is crazy. And in this market, it's insane. But you're going at pre-seed. How do you look at the fund size, kind of portfolio construction for you guys at Hustle Fund?
Yeah, so I think this may be contrary to what a lot of funds have done, but I truly believe that pre-seed pretty much means, almost by definition, having a quote smaller fund. And for us, I don't know, maybe you could stretch it and raise like a $75 million pre-seed. But I think once you're going beyond that, then you're talking about seed, and you're really talking about a larger seed. Like, I hate to be one of those like fuddy duddies, like back in my day when I started in the Great Recession, like, a seed round was 250K. Now a seed round on the
Oh.
small end might be 2.5 million, right? Like upping that. But
Yeah.
so the definitions have changed. But what I mean is, like, our ideal is we want to be investing in, let's say, your first $500,000 round is our
Yeah.
ideal, is what I mean by pre-seed. I realize everyone else thinks $5 million is pre-seed, but that's not what I think is pre-seed.
Yeah.
So for us, we would keep our fund small. Like, we don't see ourselves, certainly going above that 75 million, unless we had like a strategy change and went to multi-stage or something like that. But I think at this point in time, we are strictly pre-seed. We see ourselves as pre-seed in the future. I think some of the temptations that people have to go big is largely driven by management fees.
Yes.
And because we have other business lines, we don't have, we don't have a need for that. Like, we bring in money through other methods.
Bringing that up is actually something I definitely think about a lot with Vitalize too. And it's like you're thinking how you be creative as these micro funds or early stage funds that are not massive, and you're not going to play the AUM game of having hundreds of millions of dollars. You're playing a whole different game. I know Gail mentioned like bigger is not always better. Like, can you build the best $50 million fund or $30 million fund? Like, how do you do that? And you look at like historically, like the craziest of the crazy, when like Chris Sacco's like first fund, like those crazy returns, you're like, okay, well, that's a whole different ball game as well. But they're not. That wasn't a massive fund. I don't know if people realize it always. Like that was a very small fund he did back then. So like thinking about that, you can be the best at that. But to your point, since you're so entrepreneurial, you have all these different types of businesses that also bring in revenue. That then you don't need these massive, amount of management fees from huge funds. So it's a different model, which that's why I like talking to you. There's so many different models to work within the venture, which is for me always fun. I think it's just boring to think about doing the same thing as everyone else. It's just like I don't think I'd be in the industry without that. For you, then looking forward, like what's next for Hustle Fund? You do a lot of different things. A lot of things are going on. What's next for Hustle Fund, Elizabeth?
Yeah, we have a couple of initiatives in crypto. We've announced one of them, Hustleverse, but we have a couple
Yep.
of others that we're going to be announcing later this year. So Hustleverse is essentially a community for people who are builders in Web 2, and we use that phrase very loosely. You could be a marketer or salesperson or customer support, or you could be an engineer or designer or whatnot. Like, so basically people who are working at a tech company today, but don't know very much about crypto or Web3, but want to learn and want to potentially, either do some small role in Web3 or even make a full career change at some point. Because I am a big believer actually in Web3. I think it is hard to see the benefits today because just you see so many things going wrong, like all the fraud, things not working well, the UX is completely confusing or lousy, or you can't do simple things. But I think the premise is interesting because I actually think when we talk about free markets, like assuming everything went right with Web3, I actually think you can get much freer markets with Web3. But that's a long way off. So we are building this community because we believe there's a lot of opportunity there, not only for investing, but also just in general for changing the world, as trite as it sounds.
I know we're almost out of time here. Elizabeth, where's the best place for people to learn more about you, Hustle Fund, all you're doing?
Thank you. Probably Twitter. People can follow me at dunkhippo33. And my blog is at elizabethyin.com. If people are fundraising, there's a number of posts I've written about tactics you can use.
I appreciate that. And that is the most notorious name, notorious screen name on Twitter. I think everyone knows that, Dunk Hippo. I love it so much, Elizabeth. Thank you so much for the time. We appreciate it.
Thanks for having me.